Hello, Jim here. Last month was probably one of my best months trading options. I'm going to talk about what the month looked like, all the different cash flows, the dividends, the interest, all the premium for covered calls from puts, and what the big picture looks like. I'm also going to go into a little bit of detail about some of the strategies I use to stay safe and also to have a really good rate of return. And at the end of the video, I'll share with you some of the trades that I made and overall what the month looked like. So stay tuned. I think you're going to really enjoy what I have for you. Okay, let's jump right in. Now, it's been a crazy couple of weeks. We've had some crazy volatility. The market was way down, now it's back up. I do believe today we're down. We were up in the morning and we're down again. I think this is going to continue. We're going to have crazy volatility for a while, probably maybe even through the end of the year with the election coming up, plus the Fed getting ready to cut rates in September. I do think I'm still kind of guessing it's going to be a 1/4% point versus, a 0.5%. I do believe the betting odds again are beginning to go up for a 0.5 point, but I still think it's going to be a 1/4 point. So, and then there's been, I believe, the government released some information yesterday that showed that actually the number of unemployed is higher than what was originally expected. So I do think we're going through a tougher time in the economy. I think the government's been underreporting what's going on job-wise. And a lot of companies especially retail companies, are pointing to a weaker consumer, a consumer who potentially may not spend as much. So I think that's going to still cause some headwinds in the market, and we're still going to have quite a bit of volatility. So what does all this mean to you? Just stay safe. Don't make crazy trades. Don't assume that we're not going to, take a dive again. I'm not so sure we've hit a bottom. I wouldn't be surprised if we got another major dip and even went below what we went down a couple weeks. Well, I guess it's only been a week and a half ago. I wouldn't be surprised if we even go lower than we did at that time. Maybe later this month or in September. September is notoriously not a good month for the market. Not always. Sometimes it can be a good, market. It might be up one year, but not the next. But overall, I think through the many years, it's typically not been one of the better months. I think if you compare most of the months, it may be the worst month out there. So again, just stay safe. Don't take crazy risks in your trading. So that being said, now today I'm going to share with you my results from July, and I really had a good month. I didn't have anything assigned to me in July where I did have, a couple positions. I think I had Polaris assigned to me in June, and then I had a couple of other positions assigned to me in May. But July overall was a really good month, one of the best premium months I've ever had with selling options. So I'm going to share with you all the details related to that. And part of the reason I've been successful with that is maximizing my return on capital. And how do I do that? And I talk about this in every video, is again, picking good companies, learning how to pick good companies, look at return on equity, return on assets. Actually, return on assets is probably a better gauge because at times when the company's financials have some weird things about them, the return on equity can look odd. Return on assets, typically, I like it in the teens, 10% or above, where in some cases ROE may be, 0 or negative, again, because of balance sheet issues. So I'm finding ROA is probably a better measure to use. I also like debt to equity, having companies who have little debt and in their sector also have less debt than a lot of their competitors typically do better. And then I'm still a dividend investor. I still like to find companies that pay nice dividends and increase those dividends regularly. And then I take other steps, like I recently moved all my retirement accounts over to Fidelity because they have what's called the true swap account. So the cash that I am using for selling my puts is actually it earns interest. It earns I think just shy of 5%. I believe it's 4.99. And of course, that will go down in September when the Fed lowers rates. But that's an additional amount of interest. And I was shocked at how much interest it actually brings in. And you'll see that at the end of the video when I go over my monthly worksheet for July. But it's been fairly significant. And then I've taken some other steps. I've also gotten rid of some companies that haven't performed as well. And then I've also changed the way I do my trades. The strategies I use, I'm using vertical put credit spreads, which it's just a cash secured put, but you're buying the put for protection. I also am closing a lot more of my positions early. I might even reduce the profit I'm willing to take just to get out of position sooner. And then I'm avoiding earnings. All these things kind of help you with your rate of return on capital. And I definitely have seen it last month and even this month, even though I've had 2 positions assigned to me in August, this is turning out to be a really good month too. So, and again, key to that also is having safe strategies and having what I call guardrails, things that you put in place to keep you safe. It may be a stop loss. It may be, again, buying a put for protection. It may also, going a little farther out with an expiration so you can pick a lower strike. So typically the farther you go out, so if you look at a 30 DTE, so an expiration that's 30 days out, and you look at the strike price for, say, a 20 delta, and then go 60 days out, that 60-day strike will be a lot lower for the same delta, and the same thing for a 90. So the shorter period you go, like, 0 DTEs are probably one of the riskiest types of trades. Then weeklies are riskier than monthlies, and then multi-months are less risky than monthly, and so on and so on. So identifying those guardrails that'll keep you safe. Now, for my memberships, I provide a whole, in my planning worksheet, I have a whole tab that's just related to that. And it details how to stay safe, what kind of deltas to use, what kind of expirations, avoid earnings. It has details for ETFs. It has details for stocks. So it breaks it down by security. And it also breaks it down by calls versus puts and goes into a pretty much detail about it. Now, if you want to learn more about my memberships, details will be in the description. You can take a look. I have 3 memberships. I have what's called the Investor Club. It's $10 a month. You get access to my trades. You get access to my collections. You can ask me questions. There's quite a bit there. Then the next level is my Traders Club. You get Discord. You get access to every other week. I have what's called my Traders Club meeting where I talk, a whole group of us get together through Zoom and we talk about all sorts of things, ChatGPT. We talk about types of trades we want to do, different strategies, a whole different array of things. Also good tools to use, and then, how to do technical analysis, a little bit of everything. So, and I end up having like 15 or 20 people at each of those meetings. So that's the Traders Club. Then I have a coaching club. You get 2 coaching sessions. They're supposed to be 15 minutes, but they always go into 30 minutes, and you get 2 of those a month. And I have people switch back and forth, and it's monthly. You can cancel at any time. You can switch from one tier to another tier. I really want to make it simple for people to get access. And, if it's not something for you, or I don't trade the way you want to trade, then you can get in and out fairly easily. Now, I will mention in my Discord, I have traders who are doing 0 DTEs. I have futures traders. I have a lot of people who are doing different things. And the fact that I can keep it fairly easy to get into and accessible, it's turned into a good community. I actually have some traders in it that are more experienced than I am, and I'm learning from them too, as well as they're learning from me. So I just wanted to mention that. And as always, please, like the video. It does help with the algorithm. And as always, please subscribe. That being said, I do want to talk about all the different cash flows. So what's been surprising to me is when you trade and you're an options trader is all the different cash flows. I look at it as multiple cash flows. So I look at my my call options as one cash flow. I look at my put options as a different cash flow, and then the dividends and the interest, and then even the appreciation. Like I've owned NVIDIA for a long time, but I've been selling a share or two here and there. And that's also even, you can even think of that as cash flow too. And just kind of, it opens up a whole new world, and it's allowed me to do things that I could not do before and actually retire or have financial independence sooner than I ever thought possible. So it's been really surprising. And that's also why I moved my accounts around. I mentioned in the beginning of the video, I believe, or in previous videos, that I moved all my retirement accounts to Fidelity, and then I have all my regular brokerage accounts at Schwab. I like Schwab's interface better. I like Thinkorswim. And I just like the online portal for Schwab. I've been using it for many years, and I find I can pretty much do anything and everything I want to do. Fidelity, I don't like I don't like their online portal as much, and I also don't like their Active Trader Pro, but I do like their interest, and they have what's called a true sweep account. So any cash I have sitting in the account automatically earns just shy of 5%, which is a big deal. It really adds up quite a bit over the month. And it's right around now you start seeing all the interest get deposited as well as the dividends. So, and then one of the other things I did want to mention, and I've talked about this also in other videos, but I'm wording it a little bit differently. Emotional awareness. So when you're trading, it's being aware of what's going on, being aware of your own emotions, and not what I've seen a lot of people do is they panic and they may close out of a trade at a big loss when if they were patient, they could have managed that trade and gotten out of it, or the stock would have come back and they would not have even have had to manage it. So this emotional awareness is also being aware of, what's going on out there, and understanding that a lot of people are trying to scare you, it just always seems like so many people, especially on YouTube, are so black and white. It's either the sky is falling or, oh, momentum, crazy, let's all get rich, let's get greedy. I always go back to what Warren Buffett says, be fearful when others are greedy and greedy when others are fearful, and being aware of that, and being aware that you can, in some cases, before you start getting fearful, verify the information you might be hearing. It may be partially true, or it may be something kind of made up to kind of, if it's a YouTube creator, it may just be, to get clicks or to get you to subscribe, or, if it's a different type of influencer, it may just be trying to pull you in. And I also see that with the whole financial industry. It seems like they want to keep people fearful that they don't have enough money and that they need to constantly, stay in, keep working so that they can continue to add more to their retirement accounts. And, so just be aware of that. What we're finding, or what I've found, especially with a lot of the people I communicate with and a lot of the analytics I like to follow, is a lot of people are actually dying with lots of money. They have more than they need. So just keep that perspective. I kind of like to look at it as emotional awareness, that, again, that you're aware of your own feelings as well as what's happening in the market. And then, of course, a risk management focus. So, which I think is a good thing at any time. Always keep an idea of how you're going to minimize your risk. Are you betting too much? Is your position size too large? Should you lower the position size? Should you increase the position size? Are you getting into a stock and it's very pricey, so maybe it's not a good bet? How will you manage that if it drops majorly? And then are you using something like a planning worksheet or stop losses or something along those lines? Having a good risk management focus will kind of keep you safe. And then also, what kind of trades should you be performing? It's pretty much common sense with when you're used to trading options. that on a down day you would want to sell puts, and an up day you would want to sell calls. But it also makes it nice if you're doing both calls and puts, that if the market's going up, then your puts become very profitable and you can maybe get out of them early, and vice versa with calls. If the market drops, and suddenly your calls become very profitable and you can get out of them early. So even that sense of balancing your calls and puts, I have pretty close to 50-50 number of calls and puts. Now I probably do more trading with puts. I'll go a little farther out with covered calls. Sometimes I'll go 3-6 months out, mainly because I'm just trying to double the dividend. And I also don't want to get into one of those scenarios where a stock rebounds and suddenly you're deep in the money because you sold a covered call maybe below your cost basis. That's another thing. Keep track of your cost basis. Try not to sell covered calls below your cost basis. Always give yourself some wiggle room. And if it's a growth company, a company that's growing really rapidly, like a NVIDIA or not Peloton. There's another one. Trying to think of who it is, but I can't think of it right now. My mind's going blank. But if it's a high growth company, be sure you're taking less risk. You might want to do a much smaller delta. For a company that's growing like a NVIDIA, you might want to do more like a 10 delta versus a 15 or a 20 delta. So just a few things to keep in mind. Next, we're going to jump into my trades, what my overall month of July looked like. So stay tuned. Let's jump into that now. Okay, I've opened up my July planning worksheet. I typically work with the same planning worksheet all month. And then at the end of the month, I kind of condense it and bring in the dividends and interest. So at the top, I have my goals, weekly goals, and then also monthly goals. So weekly, I'm trying to make $1,750 in just options premium and $7,000 monthly. You can see I beat it quite a bit. I made over $9,175 and 99 cents. So really 9,176 for the month. Now, a lot of these are still open, so they could still go against me. But this is typically what each month looks like. Each month has the different trades that are closed as well as new ones and ones that are rolled. And we'll kind of go through the list quickly. I won't go into detail. A few of the trades I might go into a little bit more detail, but here I did a roll for ARK. And ARK is probably my only ETF that is probably still a loss. I believe it's still like a 15% loss, but it brings in some pretty good cash. So I brought in almost $800 in this one trade. But I did go way out. I went out to 12/19/25, so it was a leap, and I rolled it. And I'd be fine if if ARK gets called away from me. I'm not too worried about that. This is Home Depot. I did this trade on 7/1, and I recently closed it, so it was also very profitable. You can see here it was a 67%. But actually, I closed it almost 30 days early, so that's probably over 100% return. And I made, so it was a 305,295. Home Depot was 336 at the time, and I made $261 on it. And then my required capital, because it was a vertical put credit spread, again is 2,000 minus the 261.24. And then this is just adjusted for the year. I adjust everything for the year just so I can better compare them. And then I also had CLS. This is a cash secured put that I closed. I've recently opened up another one at 45, but a good company. And main reason I did a cash secured put is it's pretty inexpensive at $40. And it's definitely a company I want to own. They have really good profitability, just a well-run company. Being a cash secured put, 26% return is really good. And I closed it 17 days early. So, and then ConocoPhillips, again, another one I closed. I did Giga Cloud, I think is what GCT is. It was once a Chinese company, but I made a lot of premium with it, and It's now, I believe, in the money. It's like 22. And I believe this one, yeah, this was also a roll. I rolled it. I've been rolling it pretty much monthly. So I think I've now rolled it to 920 or maybe October. But I brought in 884 total, 128.60 for this trade. And then for a cash secured put, typically they have a smaller return. Polaris, it was pretty deep in the money. This is the one back in, I believe, June that got assigned to me. I had 100 shares assigned to me. This is another cash secured put. So I had two and only one got assigned to me. And now it's out of the money. I believe it may be like 83, 84. And I had rolled it out to 816, $80. Kept the same strike, picked up another $133. So a good company, good trade. This one I had actually closed too. The roll, I called it the roll closing. And then there's be another trade that's the new one that also probably will be down a little bit lower in the spreadsheet. BP, I currently have closed this. I don't have a BP. Well, this is a covered call. I do have a BP covered call. This is in my Schwab account. And it's at 40. I believe BP is, 34.89 at the time. And the covered calls typically have much lower returns. It did bring in $117, but that's only just shy of a 4% return, which again doubles my dividend. So I believe it pays around a 3.5 to 4% dividend. So just in dividends and covered call premium, a lot of my companies that have high dividend yields, I end up making 7, 8, 10% on a yearly basis. Next is UPS. This UPS was actually assigned to me recently. At 135, I ended up selling the 125. And then my cost basis, I'm about broken even with it. So my total premium was 621. I brought in 316 in new premium, so it had a really good return. And now even with the assignment, I believe I'm barely, maybe a small loss with it. But they pay a really good dividend too. I believe UPS's dividend may be over 5%. NVIDIA, this is a roll of a covered call. And a lot of times with NVIDIA, I just roll it up and down $2 or $3. So as the market goes up and down, I'll roll it. And then when it gets pretty close to the expiration, I'll just go out to the next month. So here you can see it was 142, a 21 delta. And I rolled it to 143 and just out to the next month and brought in some pretty good premium, 398. 301, this is probably my best trade. These previous two trades were two of my best, the UPS and NVIDIA. Square, another company I like. It also got deep in the money and came back. I did have some get assigned to me, but I still have this cash secured put. So this 65 was a strike. It was expiring in 719. I rolled it and went down. So I went from a 65 strike to a 62.50 strike and still brought in really good premium. I really played with going down lower, but I like the cash if I can get it. So, and I did two rolls in 1 week and lowered the strike. First roll was on 7.2. And I found I've done that a couple of times. I've had an opportunity to roll a company twice, potentially in the same month, and sometimes in the same week, like with Square. XLE, this was a new trade on July 9th, a vertical put credit spread, 85.75, 23 delta. And I believe this is just recently, no, I still have it. It hasn't expired. I had an XLE iron condor that expired. This brought in 283 and almost like a 52% return. Again, it's the 3,000 because it's 3 contracts versus 2. That's the difference that I did here. I decided to take a little bit more risk because these have worked out really well. So I did 3 contracts instead of 2. And a lot of times I had done 2. And that's why it's 3,000 minus 283.94 for the required capital. And it was like a 52% return. This was Google shielded wheel call roll. So this was the covered call side. And Made some okay premium on it, not great, but 210, still pretty good. And I rolled it to 117.25, and because of the cost of Google, that's why the return is so low. So you'll notice cash secured puts and covered calls, the yearly ROI is lower. IJH, another ETF I like. So my brokerage account at Schwab, it was 61 is what I did. Since it's green, it's a new trade expiring in 11/15/24. Again, another example of going a little farther out to pick up more premium. And I picked up not a lot of premium, 129, but it's like a 10% return. And I believe I only had 20. I did not have 100 shares. Then IJH, I think, had a 5-for-1 split, and then I added a few more to get 100 shares. Target, this one I just closed. I just recently closed, I believe earlier this week. This trade was on 710, and this was a roll for it. So this trade has worked out really well for me. So 195.30, almost 100%. I'll probably do another trade on Target, but it had really good earnings, I believe, yesterday and shot through the roof. Then this is Delta. This was a new vertical put credit spread, 41.31, 25 Delta. I felt like Delta was at a good price, so I took a little more risk with the put. With a 920 expiration, it was 44 at the time. And I'd be fine with owning Delta. Being from Atlanta, it's the company I always fly with. 269, 2730. Did I do 3 contracts? Yeah, I did 3 contracts with Delta too. So I took a little bit more risk with this one. Hopefully this one doesn't shoot me in the foot. I think it may be in the money currently. I think it went down to 38, 39. So we'll see. We'll see what happens with that one. I also like the price being fairly inexpensive. IWM, this is Russell 2000. It did get down a little bit lower, and I like to trade it when it's like 195, 198. So this was a 192, 182, and I closed it for a small amount. So you'll notice a lot of people will give me grief. They're like, well, your trade is still open, but here you just notice that the amount I spent closing it is also shown in the calculations for the month. Next is Cisco. This is a covered call. I have 400 shares of Cisco, so I had rolled this to 620.24. That must be 620.25. I must be a typo. And I upped it to 52.50. Was it? Yeah, I just kept the same strike because Cisco was having problems. So I believe it dropped to like 47. So it was pretty far out of the money. Brought in 398. It's not the best covered call return, yearly ROI, 2.3%, but they do pay like a 3% dividend. So another IWM, it may be I closed this one. This was 192, 182. I think that's a little bit different than the other one I did. Or did I go up? Yeah, I went up by accident. I hit the wrong key. So actually, Coke is the next one, 72.50. Another new covered call for Coca-Cola. So, and 4.4% using 5,000. My cost basis on Coke is really low. I've owned it since I was a teenager. So I end up, for many, many years, that's all I did were these kinds of trades, these covered calls, just like this one. And it wasn't until I wanted to learn the right way to trade about 3.5 years ago that I started to do all these other different types of trades. Williams-Sonoma, this was a previous one that I closed. I recently opened another one, which they had bad earnings. So they dropped big time today. This is August 22nd, and they had a major drop, I think almost like 10%. But again, I've had a lot of success with them. This is probably the 7th or 8th trade I've done with Williams-Sonoma. Great company, no debt. They have an 18% growth rate on their dividend. I almost wonder how they do it with no debt and then they're growing their dividend the way they do. And the payout ratio is relatively small. They're just a cash machine. And here are some more IWM trades. This was a roll. This was the Iron Condor. This one now is completely closed. But I did 222, 230, and the 186, 172 for the two different wings of the Iron Condor. And it worked out really well. I think I ended up making $400 and something with the two sides, or no, 154. So 127.30 times two, so I made 154.60. I don't do a whole lot of Iron Condors, but IWM, I do like to do it on them. I do believe it's too pricey right now. I believe it's back up to 214 or something like that. The next one is PayPal. I currently own some PayPal, so this is a covered call that I rolled in my Roth account. And I rolled it from 816 out to 117.25 and upped it to 75. And still brought in quite a bit of premium. I brought in 379.28. And then here's my cost basis. So it's like a almost 7%, 6.5% return, 6.59. So, and then Zoom had good earnings yesterday finally. And I believe they're up to like 67 or 68. So they were struggling in the mid to high 50s for the last month or two. Good company, no debt, similar to, in my mind, to Williams-Sonoma, no debt. Well, they're not paying a dividend right now, but they're just a cash machine. And they were kind of my bread and butter trade for a long time. I probably have done 30 or 40 trades with Zoom. So this was a 60-50. I rolled it out, kept the same strikes. Even though they were in the money, I just kept rolling them and picking up more premium. I brought in just on this one, almost 1,600, 1,594.68. So quite a bit of premium. I think we're coming to the end of it. And then Broadcom. At one point, I owned Broadcom many years ago, and I was told to sell it by my financial planner, which was probably one of the biggest mistakes. Since then, I handle all my investing, but I did have a financial planner for probably almost 10 years. And yeah, that was one of the biggest mistakes I ever made, was selling Broadcom. I think I had 200 shares, and that was, I think they might not have even have split at the time. So no telling what that would have been worth now. I don't even want to do the calculations. It's so depressing. So this was a new one. This was my first trade with Broadcom in many, many years. And currently it's still out of the money. And 145, 135. It had good premium. It was 157.74 at the time. And I brought in 263.28. So really one of my best trades, 184% return. So again, a very good company. A few more here. I have another Coke covered call, 72.50. Again, my bread and butter. I brought in not a great return, but some pretty good premium, 804. So I rolled these two contracts out, and I did a leap. How far did I go out? Sorry for moving back. In 12, 18, 26. And you might be thinking, well, why tie those up for so long? But the main reason is I have lots of shares. So I'll have literally, 3 or 4 contracts, almost every expiration going out all the way to, the farthest leap that I can go to. And I haven't had any assigned away from me in a long, long time. I think 2021 may have been the last time that happened. So a lot of times I'm moving them up and down. Other times they're new trades like this one just to generate some income. Next is Dell. Dell got into a little bit of problems recently, but a good trade, 110, 100, 17 Delta. It was 123.42, brought in 249. Again, almost 180% return. They missed earnings, and I think they had a pretty big dive. This is ODFL. I believe it's the trucking company. And it expired. I was able to just allow it to expire. And then TSM, this is Taiwan Semiconductor, and vertical put credit spread 140, 130, 15 Delta, 920.24, and another really good trade. So it was 75, but it was 231.28 and about a 75% return. It's been another good company to do trades on. Then Bristol Myers. This is probably one of my only ones that's Bristol Myers has struggled. This was a covered call, and since then it's dropped quite a bit. It may be in the high 30s currently, but again, a 3.2% return. And then Abbey V, this one also closed. So it's gotten a little pricey. I may do another one. I've done 3 or 4 trades on Abbey V. Again, another Coca-Cola trade, bread and butter. Polaris, this was a roll. This might have been the one where I had showed roll close. Now this must be the new roll again at 80. And I've just been rolling, keeping it at 80 because I feel like it's oversold. And I brought in 371.61. I brought in over $900, so the cost basis of this would be like almost $71. So I think that's a little bit crazy. I do believe Polaris will be way back up. Another CLS trade. This was a new cash secured put. So I had closed the other one. And then almost 2 weeks later, I made a new trade on CLS. I think it's Celestica. It's I think they do cloud computing or cloud storage. It's a good company, very, very profitable. 45, I think the previous one may have been 40, but they've had really good year over year earnings. At the time it was 55, and I picked up 256 in premium. So, and since it's a cash secured put, again, the return 18.5% is very good for a cash secured put. So then I had Google. I did do a vertical put credit spread on Google, 160, 150. I still have this one, and it was 175 at the time. It's come down. I think it's like 165 currently, but brought in 195, 30, which isn't bad. Pretty good return. Then this is Polaris. So the 100 shares that got assigned to me, I did sell a covered call on them, and I did it at 90. So it's currently like 85, 86. So I should be able to roll this. This was for 920 is the expiration, almost a 30 delta. At the time, they were 82.12. I believe they got down to like 77 at one time. And then I rolled them to 1220, 24, kept it at 90, brought in another $206, so again, a pretty good return, almost 6.2%. So Polaris, I think, will work out pretty well. This is Target. This is one I did the end of July, and I've already closed this. I just closed this the last day or two, and at 135, 125, they had good earnings too. They were 143 at the time, but I believe they're over 160 now. I rolled them. Did I roll them down? No, same strikes, 135, 125. Just went out to 920 and brought in 274. So between the two trades, I brought in 469. And again, I closed this probably a month early. So the return was 102 with the 920 expiration. And we're 30 days before that. So very good return. And here's another vertical put credit spread in a video. We're coming to the end of this, so hopefully you guys aren't bored to death. But 15 delta, and this was I decided to do when the video got hit hard. I decided to do this. Now this is way out of the money. I might end up closing it for a really good profit. So I brought in 282.52, 113% return. I mean, no one compares to NVIDIA for premium. So I don't know what will happen with that trade. AMD, another company that has worked out well for me. This was a roll, 145, 135, 816 was the expiration. I rolled it to 920. So I'm finding I'm rolling a lot out every month and picking up some pretty good premium. So 140, 125. They did get in the money. That's why it's 140, 125. I had to widen the spread, so I brought that down. I believe that was 145. Yeah, 145, 135. And I rolled it to 140, 125 in order to bring, to bring the short strike from 145 to 140, I had to widen the spread a bit. But I did bring in some pretty good premium. So I brought in 184, and this was like a 71% yearly return. So, and then we're to Williams Sonoma. This was a roll, 140, 130. We already went over that at one point. And so this was kind of like the refresher trade. So I brought in 294 for that one. That actually that was also a roll. And then 731. So I closed ITB. I've been able to close a lot of my ETFs. And I've had very few ever assigned to me. I can't remember when the last time I had an assignment from a covered call or to me from a put. So this I closed. I also closed MetLife, another good company that I traded on. I'll look to open another one with them before too long. And then I did another NVIDIA roll of my covered call. Again, this time I rolled it from 140, or maybe that is the new roll. Yeah, to 140. So that was my last trade. So you can see I did several with NVIDIA. I had a lot of different trades. Now, if we come down and we look at, these are the other trades that were open. I have usually around 90, what is that? I think around 100 positions open, usually about a half a dozen, maybe deep in the money, and maybe another half dozen are slightly in the money. But like I said, I think for the whole year I've had maybe 4 assignments. So this is the breakdown. Let's jump over here. So I had 12 covered calls, 6 cash secured puts, 21 vertical put credit spreads. So I had a majority of puts. So 33 puts and, well, actually 27 puts and 12 covered calls. I also had the shielded wheel, which is a combination of both. And I had 1 iron condor, which were 41 trades. So again, a majority were vertical put credit spreads. And then the next highest were covered calls and a few cash secured puts. And again, this was just the premium. So if I base that on the required capital, it was almost like a 4.83%. That's not the total value of my account. That's just literally, as we were working our way down through the trades, it's the required capital on each trade. So that's how that figures out. A 4.83% return is really good. But we'll see here when we break it down by different accounts. So here's my Schwab brokerage, and I brought in 3632 in premium, which is like a 0.63% on a monthly basis. Yearly is 7.55. My Fidelity IRA, I brought in 5543, which is like a 1.21. And you can see here the calculation. It's actually the value of the two accounts. So I did 1.21, which I tell a lot of people you can earn up to 3%. Now, I'm invested in most of my accounts. Even my Fidelity IRA now owns quite a bit of stock. And I even have some not ETFs, I also have some mutual funds. So that's why it's a little bit lower. If you're just pure cash, and like I was showing you with 190, and it's just pure cash that you're writing puts and put spreads, you can do a lot higher. But, and this isn't really counting appreciation. I'll have to do a separate video. So total premium, it was $91.75.99. And then the total value, which my accounts are a little bit over $1 million, it's like a 0.88% on a monthly basis, or 10.62, using the 9,175. And then I brought in 3575 between interest and dividends. About 1,100 of that is interest, and then about close to 1,500 is dividends. So, we could also copy, we could copy this amount down and see what it looks like. I don't know if that's F123. Oh, wait, no, not here. Okay, what I was trying to do was to copy this down to here to see. So 1.23% for total income. So that's like a monthly 1.23%. If I copy this down, we can see what that looks like for a full year. 14.76%. So, and that's just through premium, interest, and dividends. Doesn't include any appreciation. And of course, it doesn't include any big losses, like if a company has, like an Intel is in a couple of these accounts and it's had a rough time. I think it's halved its value recently. So, and then some notes, PII has become profitable. It was assigned back in June. So it currently is now profitable. And then cannot manage spreads in an IRA at Fidelity. Same issue with Iron Condors. You can call and have Trader Desk break them into legs. So I figured that out. I kept getting some weird errors, and you can't roll a spread in a retirement account. You can roll it, but you can't like sell just one of the legs. You have to get them to break it apart. Like there was a time where I wanted to sell, the outer leg, and I could not do it. So I had to call them. They had to break it up into its independent legs, and then I was able to make the trade. And that's what I'm meaning there. And then closed a good number of positions, averaged about 1 to 2 per day. Sometimes I don't do any trades. Sometimes I do 3 to 4. But I typically average around 1 or 2 a day. And I had some days with 3 and others with 0 trades. That's what I was meaning. I don't remember what this was about, but NVIDIA, Broadcom, Dell, Target, Home Depot. Those were some of the best trades that I had for the month. And so that's what it looked like. That's what my month looked like. And you can see it, you can earn quite a bit by trading options. So that's what I wanted to share with you guys. Curious to what your thoughts are. Are you earning this kind of interest? Are you earning this kind of dividends? What kind of trades are you making? What kind of returns are you making on a monthly basis? Let me know. I'd be curious to, how things are going for you. Are you having success trading? Are you closing a lot of your trades? Are you rolling a lot of your trades? One of the things I typically do in these videos is show how many I rolled versus, how many were just purely, when you can see I closed a lot more than usual. Usually this is at least 50% rolling. It's probably more like 30 to 40% rolling. And sometimes I think that's a good thing because, again, rolling is just closing your current position and opening a new one. So in the comments, let me know. Let me know what you're doing. Are you doing something different? What's working for you or what's not working for you? So sorry I went on so long, and thanks for joining me. I look forward to seeing you next time.